am grateful for everything I have in my life.
From the beginning, the stars have filled Africans with wonder. Our ancestors did not just gaze upon their beauty as they stared up at the night sky. They used the constellations to measure time, seasons, cycles, and direction. One such constellation is Capricornus, called by ancient people the southern gate of the sun. It is from this constellation that the Tropic of Capricorn got its name many centuries ago, when the sun was in the Capricornus constellation at the time of the southern solstice. All lines of latitude have geographical relevance, but to the people of southern Africa, the Tropic of Capricorn is more. Spanning across the center of Namibia, it ties together the lands of southern Africa, receiving the brightest sun rays that are directly overhead on the summer solstice. It signals the time of abundance with flourishing offerings from nature and the interconnectedness between land, people, and opportunity. We take our inspiration from the Tropic of Capricorn, the band that symbolizes abundance and creates positive change for our people. This is what every single member of our organization strives to achieve every day. Being connectors of positive change. We passionately believe that by connecting the people of this region to opportunity and prosperity, we can help take it one step closer to realizing its potential. Our humble beginnings in Windhoek were born out of a tenacious spirit of entrepreneurship. Since then, our journey has led us on a path of achievements, growing us beyond Windhoek and Namibia. Rooted in the pillars of W for Windhoek, where it all began. The three lines of our logo represent our values of being open, dedicated, and inspired. We take pride in this symbol, which reflects our legacy and how we got to where we are now. And as before, we will always achieve our successes by holding true to our purpose and values. We call this the Capricorn Way. The Capricorn Way is the foundation of who we are. It is both a path and a practice that connects our purpose with the values and behaviors that define how we work. We remain open to listen, learn, and lead together. We are dedicated to showing up consistently with care and commitment, and we are inspired, bringing passion, presence, and possibility to everything we do. Together, we will continue to reach for the stars. Only now do we seek them in the eyes of the ones whose lives we've made better. We are inspired by the dreams of those who call this beautiful part of Africa home. And we want to make those dreams a reality for them. The future shines brightly, and we will lead the way by being connectors of positive change. We are Capricorn, Capricorn Group.
Distinguished guests, Gerard Fourie, Board Chairperson of the Capricorn Group, Johan Swanepoel, Board Chairperson of Bank Windhoek, members of the Capricorn staff and subsidiaries, as well as from our associates, valued stakeholders present here this morning, and our friends from the media. On behalf of Capricorn Group, it gives me great pleasure to welcome you to the 2025 annual results presentation event, as well as the integrated report launch. My name is Festus Nagatana, and I'll direct the program this morning. Permit me, ladies and gentlemen, just to give you a synopsis of what's to come. First, we'll hear from our Group CEO, David Nyoma, who will present an overview of the group strategy. David will be followed by the Group's Financial Director, Johan Mas, who will present the financial performance highlights as well as the value that we've created. After Johan, we'll hand over the floor to Baroness Hans, Baroness served as Bank Windhoek Managing Director for the full period that we're reflecting on this morning. So she will present the Bank Windhoek 5-year journey. We also have a presentation on key financial metrics by Bank Windhoek Chief Financial Officer Denaune Kameripa. And last but not least, James Chapman, Bank Windhoek Managing Director, will give us a forward-looking view as far as our flagship brand is concerned. At the end of the presentations, we also allow for a question and answer session. And yeah, it gives me now great pleasure to invite Mr. Nyoma to the podium.
Let's see if it's working next. Okay. Good morning, ladies and gentlemen. Thank you for joining us this Friday spring morning. I always say my colleagues love to arrange things on Friday. As you saw the pictures earlier today, we are in a country where 1 foot is in the city, 1 foot is in the village, the farm, or something outside Windhoek. Thank you very much, Festus, for laying the protocols. The Capricorn family, its captains are here, and our partners in development, and our auditors. Our auditors have to be put separate because they are totally independent. Colleagues from the media, if you are here, thanks for being so early. I will be very brief. They say it starts with strategy, with a plan, and everything else follows. During the past year, we continued on our strategy, and it's, when you look at it, that is what it is. And that is what we implemented, and what your Hanmas, Baroness, ZK, and James Chapman will present is a consequence of what has been implemented. First is what we have done is to group our strategic pursuit in 5 choices. Choice 1, it's really about growth. We have some kind of fancy name about it, deliberate portfolio action. And through this is for us to remain dynamic, scan the environment, identify opportunities, and those opportunities that we believe would take us to the next level, we pursue them. We also launch new products, and in the process, strengthen our customer base and market reach. The second one has become, in today's or contemporary business, an integral part, data and digital transformation. In fact, we have enhanced it to say AI, data, and digital transformation. If you have visited the northern part of our country, starting from Oshwarongo up to the north, you see that manifested in our branches. You see new devices, new cash accepting ATMs, kiosks, those digital appliances that make banking more accessible and efficient. But what we have done also is to keep the element of individual contact between our clients and the bank. It has been quite an experience. Some of our old generation, those who were born before computers, some of them actually have been the first to be excited about all this. Curiosity never dies in a human being. The second one is sustainable integration. The Capricorn Group has adopted this one, sustainability as an integral part of the way we do business. We believe it's a responsible way to do it because sustainability, ESG, is part and parcel of what will make us survive the future. Just recently, we successfully, through Bank Windhoek, had sustainable bond launched, but it's not new to Bank Windhoek. You'll hear more from the colleagues. We had the recycle, reuse initiative at our facilities, at our buildings, and also the buildings that we are constructing for office use, etc. We do it with a consciousness of sustainability. And last week we were just in the room next door launching our social value report, where we, as a group, and all its entities have taken a deliberate stand to have an impact in the communities in which we operate, both in Namibia as well as in Botswana. I know in some jurisdictions this one has become banned, diversity, equity, and inclusion. But with us, it is part of our DNA that we have to reflect the communities that we serve, and it's the right thing to do. No one should feel left behind. For that matter, that diversity brings richness. It brings fresh ideas. And we are indeed proud that we continue to make it a pillar of what we do. I have a saying that everything starts with plan, with strategy, but actually, what leads this is leadership. And I have to here say what we see today as results is because of the leadership we, as a group, we are blessed with and also has enjoyed from the group board and all our entities. And all our entities, those boards, they have worked with so much dedication, so much commitment, and they want to make a difference, positive change. And that is really perhaps the key secret that we have at the Capricorn Group. Thank you very much, Gerard, and the rest of the directors. Johan You know, it's very intense up there. That's why you see the results. Our disciplined execution across these 5 choices has delivered strong results, even in a volatile environment. In fact, I don't know whether there is any other time that is never volatile, but it's ever volatile. Some of you, you are analysts. There must be something always exciting going on. Even this week, we got surprised on the deduction code. And I was just telling myself this morning at around 2 a.m. that perhaps that's why we are there, is to face some of these realities and see how do we navigate through them with a great deal of excitement and identify the new opportunities that emerge. We cannot throw in our towels. It will never happen. Otherwise, life will come to a standstill. Well, this is the only slide I have on the financials. I will leave the rest for the colleagues to highlight. Needless to say, most of you have seen this already yesterday when we issued the NANS. We remain profitable and we would sustain this profitability over time, no matter what they throw at us. We have to manage our risk, our capital adequacy, our liquidity, and the group's solid financial performance and strong capital position has enabled attractive dividend payouts, with dividends per share rising from 112 cents in 2024 to 171 cents in 2025. I'll leave the details for the colleagues to share. Don't want to steal the thunder from them. This year-on-year growth in dividend is a testament to our disciplined approach to capital management and our focus on delivering long-term value. The trends in profit growth, capital adequacy, and dividends are not isolated achievements. They are the result of our strategic choices and collective efforts across the group. By executing our strategy with discipline and agility, we have built a resilient, future-ready organization that creates value for all our stakeholders. Our financial strength enables us to invest in our people, in our communities, in innovation, while rewarding shareholders and supporting sustainable development in Namibia and Botswana. In conclusion, Capricorn's financial highlights for 2025 tell a story of growth, stability, and shared success, driven by disciplined strategy, operational excellence, and a commitment to positive change. Thank you, and we look forward to engage with you.
Good morning. Um, I again have the privilege and the honor to reflect back on a really good, solid set of financials for the year ended 30 June 2025. Now, the numbers have been out for almost a day now, so I'm sure all of you have gone through it and studied it. Looking forward to all the questions that you have for me later. But we can maybe dissect some of those numbers just now. But before we get there, I would just like to highlight some of the value that was created by the Capricorn Group during this financial year. And every time I look at these numbers that are on the slide here, I am reminded that Namibia and Botswana, for that matter, is a better place because Capricorn is there. I think we're really contributing to the economies where we are, and we have created value to the region that we operate in, to the value of 5.7 billion over the financial year ended 30 June 2025, where our employees benefited from 1.4 billion, our suppliers benefited from 1.1 billion, and 88% of those costs that were paid to our employees and our suppliers were spent locally in the regions that we are. So it's only 12% of expenditure that was paid to foreign countries. So I think truly a good testament. Our shareholders, hopefully most of you in the room, also benefited from dividend payments of 621 million. And that is the dividend payments that were paid during the financial year. It excludes your dividend of 110 cents that you'll be getting in a month's time or so. It also excludes any fair value gains on the share price that was delivered by the market throughout the financial year. And then on the top table, the left bottom corner there, the CSR spending that we did. So 26.7 million that was spent on CSR projects. You would notice on your tables, for the ones that are in the room, on your chairs, there was a social value report that was put down for you. It's yours to keep. Please take it. And for me, what stands out, if I look through this and I see the pictures and I see all the differences that was made to the community, it's a lot more than just the 26.7 million that was spent. If you look at the pictures, you'll also see the employees of Capricorn, including the executives that are actively involved with these CSR projects that we have. I reminded myself again that I too go on some of these projects once in a while. The last one I was instructed to go and paint a school. Yeah, safe to say, I think there's a large chunk of this 26.7 million that was spent on hiring a professional team to come and fix the paintwork that I did. But we are there, and we are doing it for our communities as well. Then I think also taxes that were paid to the tune of 1.4 billion. And then also a very important stakeholder is the customer as well. The customer also obviously helps us to create this value for our other stakeholders, and they benefited from various loans that were given out both in Namibia and Botswana, and then also the spending that we did on digitization as well. And then last but not least, just like to highlight the contribution that CAM did to the economy in the current year, where the funds under management by CAM distributed 2.9 billion to their unit trust holders during the year. Going into the financial results, maybe just a reminder to our shareholders of what you're actually invested in. So currently we've got subsidiaries in Namibia, which currently makes up about 81% of the profits, and then the associates contributing another 10%, bringing the total on the left-hand side to 91%, where Botswana, the two subsidiaries there, then contributing another 9% of the profit. So we have really, I think, over the last couple of years, really diversified our footprint. Bearing in mind that when we listed in 2013, it was only Bank Windhoek, and Bank Windhoek is currently contributing about 2/3 of the profits that we have. So we truly have a diversified service offering. Going into our key financial metrics, ROE still the main one for us, the main focus point. We still have that ambition to get to 20%, and every year we are inching closer. We've gone to 18.2% in the current year, up from 17.9%. The 18.7% in 2023 was largely also contributed by the introduction of IFRS 17. So there was a restatement in a lot of the numbers. Without the introduction of IFRS 17, the ROE in 2023 would have been 17.6%. And then you would have seen that steady increase year on year in ROE as well. Then we're also very proud that our cost to income has now gone below the 50%. We were very close last year, where we ended exactly on 50%. So we are now currently at 49.5%. And looking to improve on that going forward as well. Our non-interest income as a percentage of total income, where we have the ambition to get to 45%, we've also taken one step closer, where we are currently at 44%. Unfortunately, the application of IFRS is sort of denying us to get close to 45%. And I see Deloitte laughing, because it's their fault. So there are certain bank charges, for example, your fees at the inception of a loan, which for a normal person is a bank charge, it's a fee. IFRS sees it as interest. So there was a large chunk of income that was reclassified from non-interest income to interest income in the current year. Without that reclassification, we would have been very close to our 45% target. But we will continue to work on that, despite the curveballs that IFRS throws at us. Our non-performing loans stayed steady at 4%, but really, I think, a tale of two countries in the current year. The credit risk indicators in Namibia improved a bit, helping an improvement in the NPL percentages at a Bank Windhoek level. However, this was offset by the economic conditions in Botswana that went south for the last 7 months of the financial year. But at least our diversity then helped us to stay at a 4% NPL percentage. Then last but not least, our loan to funding also increased slightly over the prior year, but does remain below our target of 90%. And I think a large chunk of that increase was actually also to do with the lower liquidity in Botswana. But still, I think it is a percentage that we are quite comfortable with. And it's still, as you can see there, an improvement over what we had in 2023, which was also a percentage that we were comfortable with at that time. And going on into some key financial highlights, I think a lot of these percentages and highlights were shared on the previous screen as well. So I'll just highlight some items. I think the main one to highlight here is the dividends per share, and David did allude to it as well. So we have, for the first time since our listing, declared a special dividend of 36 cents. That is included in the 171 cents on the screen. And it's really a testament of our capital management over the last couple of years. I think since after COVID, we were really adamant that we do a proper management of of our capital to make sure that we have efficient use of our capital, bearing in mind that we don't always have a big brother from South Africa to come and bail us out when there are capital shortages. And I think our first special dividend this year is testament to that decision that was taken a couple of years ago, and we aim to still continue with this efficient capital management going forward. And just lastly, on the dividends, just like to remind our current shareholders and specifically our potential shareholders that you have until the 3rd of October to buy your shares to take advantage of the dividend that will be paid next month. Then, just to put some indicators to the numbers as well, you'll see that all of those arrows are pointing up, with the exception of 2. And I'm proud to announce that the 2 that are pointing downwards are the ones that you want to point downwards. So I think overall, when we compare ourselves to the previous financial year, a very good performance. Then just lastly, from my side, I would like to close on a somber yet encouraging note. We did see some economic hardship that came through in Botswana over the last 12 months or so. We saw a GDP that contracted by 3% in 2024. There's an expectation of another contraction of 0.4% in the current year. I think we had one economist that was quite optimistic. He said they're going to stay flat. So it is quite a somber note coming out of Botswana. That being said, if you look at the numbers in the tables, I think Botswana, specifically Bank Gaborone, did very well navigating the storm during this financial year. There's obviously still a lot of hard work going forward, but they really did well. If you look at our increase in net interest income, went up by 13.8%. The net interest margin came down, but still more than what we had in 2023. Non-interest income saw significant growth. The only blemish, unfortunately, was the significant increase in impairment charges, which then resulted that our profits stayed mostly flat. There was a small increase of 2 million pula year on year. But I think considering that our competitors put out statements in the market where they are expecting their profits to go down by 30%, 35%, 40%, I think I will take a small increase in profits. And our cost-to-income ratio also improved significantly. So definitely still a lot of hard work ahead, but I think we did very well to manage the storm in 2025. So I will be on stage still for the Q&A afterwards. So I'm expecting a few questions on this, but I think for now I will then hand over to Bank Windhoek. Sorry, I think we are pressing the buttons at the same time.
They say love makes the world go round. Or is it money? Maybe it's both. Well then, is it possible to love a bank? Let's take a journey together on a scenic route lined with the rich tapestry that defines us as a people. Threads of unique stories woven together to make us one. From the Walelepos, Morokeni, Awe Vaseye, past the Mwais, to the Kiriri Samires. The sound of home. In every language, we are because you are. With every heartbeat, our dedication is clear. We celebrate the joyful cries and embrace sorrowful tears. Through the ups and downs, it beats strong. Our hearts beat red, proudly red. Beating for ecosystems that power and drive our nation, where innovation and craftsmanship prevail. With the click-clicks, the tap-taps, and the brrrs. Keep our economy growing and our communities growing. Land of the bravest. To celebrating the everyday, to precious moments and priceless milestones. With the Verpas, the Keiers, the Braais, and the finer things in life. We say cheers. All because yours is a relationship worth banking on. To retirement and to legacies of a life well lived. To the future and vandag. We are in it together, cherishing every now as we build towards Hisho and beyond. We get it, because as a truly Namibian bank, we speak all 13 languages, plus one, your love language. Is it possible to love a bank? Come, journey with us. Bank Windhoek, a member of Capricorn Group.
Good morning, ladies and gentlemen. I hope you can all hear me. Let me just adjust my mic. Is it possible to love a bank? What an honor it's been to be part of this journey for the last 9 years. And it's my privilege this morning to present to you for one last time. I must just tell you that when you saw what you saw on that screen, where all of those fans were celebrating, I must just tell you that those were Liverpool fans. And they were all watching a Liverpool game. So as David has said, the realities over the past year have been quite interesting. From a macroeconomic context, which always sets the frame for strategy, it's really been flogged or flagged by uncertainty. We've seen surprises in terms of trade wars, the announcement of new tariffs, but overall, a very exciting, almost too exciting year in terms of the macroeconomic backdrop. And furthermore, it continues to look like volatility is now going to be our new norm, if it hasn't been already. The presentation today really has the following structure. I'll be talking to the operating environment, a little bit on the strategy update. ZK, our CFO, will be talking to financial performance, and James will be talking to the journey ahead. I'm still struggling a little bit, but I'll get it right. So in terms of operating environment, as I've said, volatility seems to underpin the future. We've seen modest credit extension, but what we've also seen, especially in the banking industry, has been the retention of market share. So despite the shifts in private sector credit extension, Bank Windhoek has retained its leadership position as far as especially loans and advances is concerned. We've also seen competitive shifts. We've seen changes in pricing. But as we all know, the world has been redefined by the onset of AI, Gen AI, and a new way of conducting business is now the order of the day. Coming to strategy, we'll talk to strategy a bit more in the following slides. But really, strategy is our response to the operating context. And the 5-year story really lends credibility to not only the financial outcomes, but also the non-financial outcomes of our strategy. It's been a key year in terms of leadership transition, and we've been able to provide strong evidence that our succession plan works with the appointment of James as my successor. If I can go into the actual strategy, I'll start with a vision. We aspire to lead in creating sustainable value for all our shareholders by partnering with customers, with employees, and with communities. And our strategy is underpinned by choices which align very strongly to the group choices that David spoke to earlier. Growth, customer experience, employee experience, bank optimization, and sustainability. All of this is underpinned by what we call our business fundamentals. Our business fundamentals really give us our license to do business in terms of the various risks that we manage, as well as the various opportunities that we seek through just exploiting the opportunities that those risks themselves present. We are here to create value, as David said, for all stakeholders, and this really ties back to the vision about serving communities, serving our employees, and serving our customers. If we look at the past 5 years, what is very important is that we can back our strategy with outcomes. So often we see PowerPoints that talk to strategy, but very little evidence, and the evidence goes beyond financial. So we've organized this into 4 themes. The first one is purpose beyond performance, making banking more human, more accessible, and more empowering, being co-creators of opportunity, and lastly, resilient stewardship, which really starts ushering in the discussion in terms of financial performance. Purpose beyond performance, David spoke to it at length, Johan touched on it, but really strategy must serve people. Capital must serve purpose. So capital allocation must align to strategic priority. We must serve our society, as Johan has also said. Namibia must be better because Bank Windhoek is here, because we are here. And lastly, it's about striking the right balance between innovation, compliance, agility, profitability, and purpose. And I must admit to you, not a very easy task, especially given how delicate achieving this balance can be. So when we talk about purpose beyond performance, I'd like to touch on the fact that on top of being a substantial investor in the Capricorn Foundation, Bank Windhoek also responds to other initiatives that face our communities. And one such initiative has been our school feeding program. In partnership with Imago Day, we were able to feed 2,076 school children this year. This was something that was very close to my heart, especially because hunger is urgent. Hunger can't wait. And we were very fortunate to be able to respond to this growing need. The second project that I'll talk to is our grade 8 and 9 maths teachers initiative. We launched this in partnership with the African Leadership Institute, as well as with the Ministry of Education. The area where the biggest weakness was identified in terms of maths, and especially maths, and in future, I suppose, science, was really grade 8 and 9. And this is where the intervention was then crafted to address those needs. And I'm happy to say that 7,000 learners and 160 teachers have been impacted by this initiative. Last but not least, our flagship CSR project, which is the Cancer Apple Project. And since inception, we have been able to raise 38.5 million rand. And that's not something that Bank Windhoek does by itself. This is a Namibian project. The amount of effort that our partners put in, school children selling these apples, our branches. At some point, I've actually asked James when he was in retail, I actually asked him, I think we're becoming so good at selling apples, and I would like to see that almost be transferred to other sales. But really, it comes from the heart, and it's something that we have been doing in partnership with all of you. In terms of the other focus areas, we've been very, very prevalent in various sports codes, arts and culture, and the contribution is not only financial. So many weekends our staff members spend at these functions, launching various sports events, the various chess events and festivals. So it's not only contribution in terms of financial, but very much so in terms of time, in terms of effort, in terms of focus. The next theme is really being co-creators of opportunity. And if you look at the size of our GDP and the numbers that Johan spoke to earlier, we have a role to play as economic orchestrators in Namibia. And this really talks to how we position ourselves. I'll talk to the next slide a little bit more about the sectors that we've looked into, especially over the last few years, and how we've grown those sectors, but also emerging digital products, such as our Easy Wallet, our e-money strategy. How do we create more financial inclusion I suppose, more cost-effective means of banking clients with the aim of not only giving them access, but allowing them meaningful use of financial products. So creating opportunities for our clients is very important, but as David has said, it's equally important to do so for our employees. And by doing so for our employees, we actually create a virtuous circle. Investing in our employees ultimately creates opportunities for our clients. And we've been very vocal, we've been at the forefront of our strategy has been employee experience, and core to that is really leadership investment. But also making sure that we embrace diversity, equity, and inclusion, which I can say from my own experience, diverse teams simply perform better. Our deep understanding of local realities adds to our competitive advantage, and ultimately we believe that strategy is a system of advantage that differentiates one company from another. So just looking at some of these sectors, these are not all. Agriculture, we've invested 3.9 billion. This is almost 10%. Well, it is about 10% of our total loans and advances. Agriculture is the largest employer in our economy, and therefore this creates value not only for the sector, but in terms also of the multiplier that comes from agriculture. We invested in mining, we've revised our risk appetite, and we've seen good growth in the mining sector in terms of our exposure to that sector. Sustainability finance, which continues to be a focus. And lastly, oil and gas, which is emerging, and we're starting to cut our teeth into new territory in the oil and gas arena. I'd just like to talk to the e-money opportunity. Really has grown quite exponentially. We're very proud of what we are able to do in terms of our wallets, in terms of evolving our wallets, and also participating in new initiatives that talk to more interoperable wallets. We've also believed very much in client acquisition as a fundamental for growth. Ultimately, businesses grow by doing the right things. And for a bank, that is acquiring the continuous retention and acquisition of profitable customers. And also the ability to make sure those customers are well banked, as well as I said earlier, creating opportunities for our customers. So when we talk to resource allocation and strategic focus and priority, making banking more human, more accessible, and more empowering has been a key theme for us over the past 5 years. We've modernized our branches. In fact, we've rolled out in the past financial year 11 of these new format branches. I'll talk a little bit more to those branches a bit in the next slide, but also core to our digital strategy is really building authentic banking relationship. So where human banking meets digital convenience. We're not on the page where it's all about digital. We strongly believe that the human interface matters and that becomes a strategic differentiator. We've also, on the theme of digital convenience, explored how we could empower our clients to assist themselves. And we've introduced at all of these new branches 24-hour self-service hubs where clients can bank after banking hours at any time at their convenience. We've also invested extensively in digital platforms, which include the online banking platforms that we're rolling out on a phased-in approach. Lastly, as I've said earlier, the blend of empathy for clients and digital convenience, we believe, will set us apart. So just to talk to the evidence that backs the strategy, because of our investment in this digital journey, which we called #GoBeyond, we've been able to migrate cash out of our branches. And when we look at this in 2020, we just started rolling out cash accepting machines. As it stands today, 52% of deposits, of all deposits, are now being conducted on cash accepting devices. And what's even more interesting is that 46% of these deposits are now happening after hours. One of our key aspirations was really to position our mobile app as the primary banking interface, especially because it's very convenient for clients. And after having conducted our client survey this year, the majority of our clients identify our mobile banking app as their primary banking interface, which for us is exactly what we set out to do. We've seen 10 billion in value go through our mobile app over the last year, and we see volumes go up by 42% over the last year. So really a success story and evidence that our investment in digital technology is paying dividends. Lastly, as I spoke to you earlier, we spoke about the branch journey, where in the past year, we literally revamped 11 branches. In the past, we would have done 3 a year, but as part of our digital acceleration and the reformatting of the entire branch experience, we've rolled out 11. And this is not only about just the technology. It's a combination, and it's deliberate. It's very quite deliberate and intentional, where we aim to bring together not only digital technology, but to bring together great technology, great spaces, and great people. And we believe the combination of those three creates a unique differentiator, not only for ourselves, but also for our clients in terms of overall experience. We've also not only looked at the people in the branches in a typical way, we've rethought our coverage models to ensure that the branch becomes a place where relationships are nurtured, where relationships with our bank are strengthened. So furthermore, just to show you the journey over 5 years has really been quite astounding in terms of digital uptake. We've seen transactions go up by 21% on a compound aggregate growth basis. We've seen values go up by 21%. Our mobile app has stolen the show, and that was deliberate, that was intentional. And lastly, even internet banking, we're starting to see good growth and good uptake. This takes me to my last slide, which talks to resilient stewardship. And if volatility is a constant, then how do we build a sustainable business that is not only able to withstand volatility through how we manage capital, how we manage credit risk, how we obviously look at things like cyber risk, which is very topical for banks, maintaining risk and compliance standards and regulations in an environment where regulations are changing quite fast, and there's a move towards what our central bank calls smart regulation. We're also continuously optimizing our IT environment. But if volatility is a constant, then it's beyond withstanding volatility. We now move to creating opportunities from this volatility and aligning capital to those opportunities. One such opportunity is the alignment of capital to climate. We started with the green bond. We evolved that to the sustainability bond, and of late, we've launched the sustainability-linked bond. And lastly, in as much as we're migrating our clients to new technologies, it's important to ensure digital trust and security, and that's key focus. On top of that, use this technology to deepen relationships. Ladies and gentlemen, that's all from me this morning, and I'll hand over to my learned colleague, Lenaone. Thank you.
Yes. Good morning, everyone. See, my sound is on. You can hear me, okay. My brief today is to speak for about an hour. Okay, I won't be that long because I think the colleagues have covered most of the stuff. I think that as a guy who loves capital, I love like the fact that my 3 previous colleagues spoke about capital. If we get into the results for Bank Windhoek, I think that if we start out, Baroness highlighted the volatility, David did also the same, but perhaps in the Namibia context, it's maybe 2 main things that affect our results. The repo rate cuts. In the last year, we had 100 basis point rate cuts. Obviously, that plays out into how much we make from interest. And then you'll see the good story of that Baroness spoke to about the 5 years of investment and continuous focus on customer growth playing out in how we were able to actually grow margin in a rate cut environment. The other one is credit extension. This year it was 5.7, so sort of a little bit of a recovery or better than the last few years.
but still well below the pre-2020 levels. We will also touch on that when we get to our advances growth. I mean, GDP at 3.8%, some sectors do well, others struggle. So, but I think the outlook going forward is looking optimistic. If I then get into the highlights of the Bank Windhoek results, advances, I mean, profit up 11.9%, which I think is a solid performance given the context in which we are. Advances up 2%. A lot of that came from residential mortgages, up 3%, and vehicle and asset finance at about 14.5%. Then the other one is we struggled a bit on term loans and commercial loans. Of course, Baroness spoke to the changes in competitiveness there. Certainly something we will need to respond to. Vehicle asset finance, we are market leader now. We have been market leader the last few years. And the residential mortgages, we are second in the market, but I think we are able to get the biggest chunk of growth in the year. Margin at 5.18%, I think this is a remarkable story. I love this story because it's really, you can only achieve this after constant investment in this. If you look at it, our current and savings accounts are 35% of our total funding base. A few years ago, we were around mid-20s. So obviously now our mix of funding is more tilted towards cheaper funding sources. Therefore, we are able to let go of some of the more expensive funding sources. So despite losing return from interest rates, we are still able to improve margin. And then return on equity at 17.59% or 17.6. I was told to round it off. I don't know why I kept it at that. I think this story will also unpack a little bit later. Obviously, it's always, there's two sides to one coin. Is CAR on one side, ROE on the other. CAR is obviously the extent to which we can absorb unknown risk or risk. That now it's trending at 18.2, as you can see on the far side of the slide, which is very high. So we have good capital. But then the other side of it is that at some point, if you have way too much capital, it causes a capital drag. If you are not able to generate sufficient returns, then you start causing capital drag. But what you can then see is that, which I will show you later, is that we have not caused capital drag. In fact, we created economic profit over the last 3 years. And I guess the evolution of it now is to start moving to not only economic profit, but how we look at growing economic profit going forward. And then maybe last that I can cover on this slide is cost to income ratio at 49.1%. Johan also spoke to it. I think it improved a bit year on year for us, but I think keeping it below 50%, despite 100 basis point cut in rates, is still a very, very good story. If I then touch on it, I think I've covered advances already. This is the story as I spoke to. You can see vehicle asset finance and residential, and then you can see the outcome of the competitive landscape in the overdraft and term loan space. Of course, I think this is something we will have to work how we respond to the market conditions. And I believe so long as we are rooted in how we have decided to play our strategy, this is probably something we can easily fix going forward. The current accounts and savings proportion of funding story I spoke to, you can see on the far left how we have grown that and then let go of the more expensive sources of funding, which is NCDs and debt securities. The margin, I spoke to comprehensively here. You can see what I spoke to. So as much as we lose on price, we make it up on mix and volume. And then therefore the margin is still able to improve. Impairments, so I think the environment has been volatile, yes. The question is, I always wonder, is the more volatile versus less volatile? But what you clearly see is that although it has been tough, from now going forward, the outlook looks a lot better. You can see the reduction in NPL over the last few years, and you can also see the reduction in credit loss ratio over the years. Then the question is always about, are we adequately provided? If you see the far at the bottom slide there, adequacy of provisioning, you can see that we have 1.12 cover. Of course, this speaks to uncertainty going forward. In the years we had a lot of uncertainty, that ratio would have been higher because then on your FLIs, you'll be producing more and more provision. But as the outlook improves, then that starts coming down, which is what you see on the slide there. Non-interest revenue, so it's always a question of banks charge too much, but if you look at it, if you look at the volumes and the and the growth in NIR, NIR is up 12.8%. But if you look at the volume growth, it's 8% of the back of, obviously, Baron spoke to the good story on customer growth, and as well as how much more customers transact. You saw Baroness's slide speaking to how the mobile app volumes have gone up on all these alternative channels of ours. Therefore, if you take the difference between the two, give or take, you can see that the price increases has been around 4.5 to 5%, which is really just tracking inflation. And then the last one is around, before I get to capital, is around efficiency. So as much as cost to income has gone up, how we try to look at efficiency is saying, but this cost base, how much of customer volumes is it servicing? As you can see, that the volume growth is way higher than the actual growth in cost. So the cost per volume keeps coming down, which has been almost the strategy for us the last few years, is how are we serving the customers at a cheaper rate. Last but not least, the slide I always look forward to is capital. So I spoke about economic profit. If you look at the last 3 years, we have made economic profit. That then shows us, as I alluded to earlier, we are not causing capital drag by having a CAR of 18.2. But I guess now, and Johan spoke to that as well, is the evolution of capital management now. So we started with saying, let's get to economic profit. The question now is, how do we then enhance that going forward? And that's now what we'll see probably play out as the years come by. On that note, thank you very much, everyone, and I can go over to James.
Good. Thank you, Zanani. Good morning, everyone. I seem to be standing between yourselves and the village or the farm, as David mentioned. And for some of you, I hear also the Bank Windhoek Golf Day after this. So I will keep it very brief, looking ahead, just give you a glimpse of what you can expect from Bank Windhoek and the Capricorn Group. I am not going to reiterate everything my colleagues have said and reiterated, I think, on four occasions already. Amid uncertainty, we will continue to focus on being resilient. We will continue to focus on maintaining a strong balance sheet and really putting capital management, liquidity, and then also proactive credit management at the core of our business in these uncertain times. We are very aware of all the regulatory changes and the changes in risk in cybersecurity, as Baroness have mentioned. And someone has mentioned the deduction codes. We've seen the pronouncements being made on the prime rate spread. So many things changing in our environment, but it is a constant that we have managed and will continue to manage. And then really our focus area, driving sustainable growth. Also to what David and Baroness have mentioned, we will very much focus on specific sectors, some of them which have been covered, specific segments where we see value. And one of the key things that we've also seen lately is the importance of innovative solutions, and not only focusing on the segments and the sectors, but the solutions we provide. And there are some many exciting things coming up in that space that you can look forward to. And then for the next cycle, what we also really want to look at and continue to improve, which Baroness and David also spoke to, is really our customer service, placing the customer at the center. Whether you're in the front line, whether you're in the back office, whether you're in IT or support function, everyone must sleep, eat, and drink customer. And that is really our promise to our customer. We will continue to enhance our physical channel support for this very digitally enabled world. We see that as critical to providing a superior customer service experience. And then all of these, at the end of the day, is underpinned by digital data and innovation, leveraging new technologies. So as you can see from the slide, it really cuts across all these fundamentals that we will be looking at. And we also have some very interesting solutions internally and externally that we are currently working on in rolling out to the market. And ladies and gentlemen, then, as the last one, with a 43-year history of being a very proudly and truly Namibian bank and group, we will continue, as was mentioned, to serve our purpose beyond profit. And we will continue to be creating or co-creating opportunities. And when we look at our way forward, we will continue to focus on customer, we will continue to focus on innovation and leadership. And by that, we will continue building a future-fit and resilient organization, one that can contribute to a stronger Namibian economy, a more inclusive Namibian economy, and one where people are empowered and where people can thrive in. Ladies and gentlemen, we are connectors of positive change. Thank you.
Thank you very much, David, Baroness, Johan, James, and Venaune for that insightful presentations. You have really accounted to your stakeholders. Thank you. I now open the floor for questions. As customary, please identify yourself and the organization that you represent before you field your questions to the five speakers here, not to me, please.
Good morning, everyone. Emmanuel from 91. Congrats on your numbers. Very impressive. It seems to be a good year that you guys had. I just had a question on the headwinds that you guys are facing. At Antrepo, the deduction code that's been removed, I mean, the lending has stopped now. How do you plan to navigate this disruption, and what opportunities are you seeing there? As well as on the Botswana side, where the diamond sales are down now, that economy is struggling. Plus, on pay of finance, the Botswana government is reviewing the allowable, the take-home pay for government employees. How do you plan to navigate, and what opportunities are you seeing? Thanks.
Thank you.
Well, let me kick off with the Intrepo, or let me say the deduction code rather. First of all, the announcement came out of the blue. It came sudden. As you know, the briefing with industry was on Tuesday, on the 16th of September. It is affecting two of our key businesses, Intrepo, as well as Bank Windhoek Finance. Bank Windhoek Finance, perhaps to a less extent, because of the way the client-customer relationship is structured there. It's an evolving and developing scenario that we are still monitoring. Engagements are still ongoing to get clarity on what will come in the future. So that remains a space that we'll continue to watch as to what will be the appropriate actions to take. But I've learned over years, each scenario that is thrown at you brings new opportunities. And we are looking at what are those opportunities that we should be awake to in the new dispensation, if I may call it like that. Yes, Botswana is it's a very interesting scenario. At one point, many years ago, if I may take you, in the 80s, We were students of economics, students of development studies, development economics. Festus Mogai was then Minister of Finance. He used to speak about the eventuality of diamond declining in terms of sale, in terms of its dominance in the Botswana economy. It's starting to show its reality as we speak. Both PEO and BG have been hard at it through their respective executive and boards to look at new opportunities in the emerging economy. At this stage, we still remain to test those new opportunities that we have identified and that are emerging. As shown earlier by Johan Mas, the year ending June, we still have had a little bit of growth year on year of 2%. But the situation remains very volatile and remain challenging, but we also remain fully alert and agile to the emerging realities. So that's really what I can say at this point in time, but we do have strategies, both at PEO level as well as at BG level.
Robert McGregor from Cirrus. Again, yeah, congrats on the results, and I think very welcome surprise on the special dividend. If I may take the liberty to direct my two questions, I think the first to Johan. Maybe just looking at the results, it seems like it was a tale of two halves from what we can see. Maybe just some color on what and why in the first half versus the second half. Was it just interest rates in Botswana impact that sort of impacted the second half relative to the first? And then maybe to ZK, the anticipated impact of the repo prime spread reduction. So to what extent is the Bank Windhoek book exposed to prime, and sort of what do you see the impact of that being on the book going forward? Thanks.
Yeah, so if I can maybe go first. Robert, yeah, so I think there are a couple of factors, but the main one being the impairment charges that came through from a Botswana side. I think I showed on that slide there was more than 100% increase in impairments for the current financial year, coming only out of Botswana. And a lot of that actually came, I think, in the last quarter, the last 2 months. So the information that you have is only 6 months and 6 months. If we had to break it down by quarter, you would have seen that a large chunk of that second half performance was actually ring-fenced in the last quarter. So obviously we'll have some engagements afterwards as well, so I'll be happy to take you through those numbers. But I think that is really what the case is. And then also, remember we are in an interest rate cutting cycle, so as that plays out, you do see that impact later on in the year, despite I think a very good margin protection that we did during the year.
Robert, on the report differential reduction, so it's a 12.5 bips end of this month and then another one end of December. So in total 25, but obviously the effect in the year, one will be 9 months, one will be 6. Our initial computation is a circa 30 million impact in this financial year going forward. So it's not really material, because it, as much as it affects the advances side, prime also affects products where we are priced off of prime, the funding products. So we don't think it's a material impact to our interest, because our total interest is around what, circa 2 billion annually. Thank you.
Okay, I see no more questions. So in the absence, oh, sorry.
So now you know how to ask your question. So, just on your write-offs, we've seen your biggest competitor had major write-offs because of the bid two, where the recognition of interest that you have to write off. What did you guys do differently that they didn't?
I suppose, Emmanuel, we complied with bid two. So the bid two is interesting. What we have done is, obviously, this regulation came a long time ago. We had a work plan on how we will implement it, and we were able to implement. The thing that must impact you should be write-offs for things. Most of the things, writing of things that were not secure should have been provided for day one anyway. You can't have things in your NPL book that have no security. So then the question will be coming to things that have security, but that should not be a lot. And then now you have the contrast between B2 and IFRS, because IFRS says so long as there's a value, you cannot write off. So, and then if there's no value, we should have provided for it in the first place anyway. So I don't know what the competitor didn't do or did, but I think we are B2 compliant.
Hi, Malcolm from 91. Yeah, so my question is a bit of a forward-looking one, which is around the change from the SARB. So the SARB has now introduced the lower band, so they're targeting 3% specifically. In Bank Windhoek's opinion, like how is this going to impact you guys, right? So, I mean, I have some ideas, but I'd love to hear from you guys. Maybe you can lend or lean on the experience that you've had when they changed from the 3 to 6 to 4.5%. How does that necessarily impact on growth in advances? How does that impact on NIMs? Do you think that having a 3% lower bound really impacts nominal growth in particular? Yeah, just like your thoughts around that.
Sorry, just clarify the question again.
Okay, so the SARB has moved from 4.5% to 3%. We saw this in 2017. So in 2017, they had a target of 3 to 6%. They moved that down to a preference for 4.5% over the cycle. Essentially, what this means is that what will happen is the SARB will have to run restrictive monetary policy for the foreseeable future in order to bring down the inflation rate over time. So this has to do with their credibility. So this is potentially an opportunity for you, because what it does is it means that interest rates then stay higher for longer. However, in the future, you do sacrifice something on the form of nominal growth. So if you have a 4.5% inflation rate, that means your nominal growth rate then gets impacted by 1.5% if you get it down to 3%. This has an impact on loans and advances. This has an impact on GDP growth, and then obviously that has an impact on your potential growth as well. Is this something that you guys are thinking about or talking about? Does it impact you? You're not worried about it? Yeah.
No, thank you. Thank you for clarifying. Yeah, I think what's interesting in terms of our interest rate cycle, just when we think we hit bottom, the Fed seems to cut it even further on their end. So it's in these uncertain times with the economic climate and the geopolitical tensions, etc. There are so many things impacting the interest rate cycles, and then also ultimately the inflation, but and the tariffs as well. The tariffs also play a role. We haven't, to be honest, we haven't seen, or we don't expect it to have a significant impact. I think the interest rate the interest rates and where monetary policy is being managed. I think that is at this point in time, we believe we're fairly close to the bottom of the cycle. We don't necessarily believe interest rates will significantly go down. As I say, it's difficult to forecast, but we are seeing it going up a bit in future, not the near-term future, but more to the medium term, in the next 9 to 12 months, we believe interest rates will pick up. So, and with that, again, there's a margin opportunity, so higher interest rates from a banking perspective would give us an opportunity in terms of going to higher margins potentially, where there's some upside in that. And we're also only seeing the impact on the non-performing loans and the credit coming through now, really also on our credit loss ratios. So the combination of the high interest rate and lower credit loss ratios with a lag effect should potentially open up for us from a profitability perspective some margin. But in terms of growth, if it will be subdued as if interest rate goes up, private sector credit extension has just been recovering and picking up 5.9% lately. So that will be under pressure. But I think from a bank perspective, what we do is through the cycle we try to manage our costs, our bottom line. We try to improve our funding mix and our funding ratios. So we will continue to pull the levers that we can to optimize almost to do what we can with what we have at the end of the day. So from a bank in a specific impact perspective, that is under control, and I think we're managing it. Even if rates go up, there are other opportunities opening up at the end of the day.
We haven't seen a direct correlation. So if you look back at 2017, definitely not. It's never a linear relationship. In fact, even in a lower interest rate environment, one expects a higher uptake in loans and advances, but you don't necessarily see it because there's so many variables at play at any given point in time. So whilst it seems like that would be may have some impediments on growth, it's not what necessarily plays out. And as James has said, is the strategy, your strategy is ultimately your response, and how you think about that solves mostly for growth. So not a linear, direct relationship, has not been the case in the past, but is something that will go into their planning scenario going forward, definitely.
Ladies and gentlemen, in the absence of any questions, we have come to the end of our event this morning. And before we close, I just want to extend a word of gratitude to all of you for gracing us with your presence. We are really grateful that you have made time to be here with us this morning. I also want to inform you that we have uploaded all the necessary reports, including the financial reports, the risk reports, the governance reports, report and the integrated report on our website, capricorn.com.ma. Kindly do visit our website for more information on that. And yeah, please do join us for a light meal outside. And thank you very much for being here.